Let's take a closer look at what drove some of today's action. Take a deep dive into the Bloomberg. Abigail, what are you watching?
You know, Scarlett, I too am thinking about yield similar to the conversation that you all were just having. I love this chart. It has a very strong message at this point. It's the 10-year yield that goes back about a year. We see that for much of 2018, the 10-year yield had been around 3%. And then we had that fourth quarter volatility, a flight to safety, and we saw bonds rally. Price, of course, trades inverse to yield, going from about 3.25% last week, or earlier this week, I should say, close to 2%. But we see a pretty strong descending trend channel with support and resistance flipped in terms of buying and selling. So we have this big rally for rates going from 2.6% to 2% thereabouts. Now we see some profit taking. This chart, Sarah, suggests that those who made big profits on bonds in the month of April and May, they may continue to take profits. The RSI coming off the bottom suggests that net, it looks like we could see the 10-year yield go back to 2.4%, perhaps providing a little bit of relief, at least in the near term, for stocks, Sarah.
Abigail, well, stocks did take a bit of a breather today, and that could be understood considering the extent of the gains that we've seen over the past week or so. In fact, in the 5 days ended yesterday, we had seen the S&P 500 gain 5.2%. Well, Frank Capillari over at Instinet looked into how common of an occurrence this is, a 5% gain or more in 5 days for the S&P, and the answer is not very. It's only happened 3 times before since the start of 2017, as you can see on this chart. The white line at the top is the S&P 500 level, the price. At the bottom, that blue line is the 5-day rolling change. Now, you might not be surprised at where these lie. They came after very large declines, so after Volmageddon in February, twice after the fourth quarter sell-off as well. But what's interesting is they have never coincided with the S&P putting in new highs. So that begs the question, maybe we do need to see some slower, some steadier rises, some gains to actually take out those new levels. Emma.
Sarah, I'm taking a look at some individual names. In fact, I've been keeping an eye for most of the day on T-Mobile and Sprint, and it seems that investors are becoming ever more doubtful that T-Mobile's $27 billion takeover of Sprint will actually happen. Both stocks declining today, but take a look at this G-chart. This shows the spread between T-Mobile's offer price for Sprint and where Sprint shares are trading right now, and it's at the widest it was been since around May 17. Now, of course, the news today was that a group of 10 states was suing to prevent the deal, saying that it's anti-competitive and would lead to higher prices for customers. Of course, that seemingly overpowering the news we got from the FCC at the end of last month, when the chairman there said that he was minded to approve the deal given concessions from the company. Where do we go from here? Waiting for the DOJ to say what they plan to do. All we know is that the head of antitrust there says that he doesn't think the FCC got concessions that went far enough.